all ages can be relevant about, right? Like if you're younger, it's like, how do I buy a house? You can house hack, you can move in with roommates, you can rent out a room, you can rent out the DADU portion of it. If you're a homeowner, how do I make money on my existing house? Do I have a garage I can convert? If I'm selling this house, do I sell it as is, or do I add the DADU and then make more money, right? If you're elderly, can I make money off my existing property? Can I rent out my garage or my shed? Can I condoize it? So I think it hits all age groups because it's a way to get into a home. It's a way to make money off of a home. It's a way to make generational wealth on a property. And I think it's very important because we're in Seattle, like we talk about this all the time. There's land restrictions, there is zoning restrictions, there is density requirements, and all of that people are moving in. So this is what it's gonna be like. So I think it's very important to educate all age groups on how they could potentially benefit from zoning changes that are coming up. The house hacking thing, I don't understand why more people don't do it.
Yeah.
It's like the government told you the only way you can house hack is if you find one other person and that's your wife or husband.
Yeah.
Or I'm like, wait, you get 3 homies of mine, we all go around this house and instead of a $4,000 mortgage, it's a $1,000 mortgage payment.
Yep.
I remember like 10, 15 years ago, like some college buddies and I wanted to say, oh, let's go buy a house over on Lake Washington. And then we'll pool our funds together. We can go buy like this nice $1 million home.
If only, right?
Yeah. And $1 million home now is what, $3 million,
Yeah.
but still.
And then you go to Tommy's the next day, you're like, I got $25. All right.
Like, oh, I spent how much money renting for how many years? It's like, oh my God.
No, but it wasn't even like, I remember having those conversations with like Ingalls and Bao and stuff and like, let's buy a house.
Yep.
And then you're like 21, you're like, what's the next process? What's the next step in this process? No idea, right?
So-
like no idea.
So where I'm from in Buffalo, there's a lot of multifamily.
Yeah.
Like the city was really built in a very different design style than Seattle.
Yeah.
Where I have a duplex, for example, in South Buffalo, and 2 unit, 4 units, those are very, very common. And so growing up in the business in Buffalo, that was sort of the way to start, was like you rent a place as a 2 unit,
Yeah.
collect rent from the other unit, help you pay your mortgage.
Yeah.
And there was a brilliant way to not only just help to cover your mortgage payment, but to build wealth through owner real estate.
You know, you said something interesting there, duplex, triplex, fourplex, whatever. I think in Seattle and probably the rest of the US, where it's going to change is you don't need to have a duplex now to do this strategy.
Yeah.
You don't need
They're
a
trying
triplex.
to back into or construct a similar
100%,
model
right?
that other cities that are older had built.
Here's a model. You buy a duplex, you move into one, you upgrade it. The other unit is doing whatever they're doing. Then your unit is nicer. It's better than it was when you moved in. Then you either move into the other unit, rent that one out for an increased rent, and that's how you do that. And you can do that with a house where the upstairs is one unit and the basement is another unit, or the DADU is another unit. So it's the same mindset, but just not on a duplex, on a single family home. And I feel like that can really change people's minds on what is possible.
And there's financing options for multifamily homes, FHA loans. You know, you can finance a fourplex with 3.5% down payment.
Yeah.
And not a lot of folks realize that.
Yeah.
So from an educational standpoint, you know, people are like, well, I need to have 20% down to buy a house. And then they think of a multifamily house where that might be even more. They don't really know, but that's our job, is to educate from options of, you know, hey, you don't need to fit a box.
Yeah.
And so you can buy a home, a 2-family home for 3.5% out of pocket.
Yeah.
Get the seller to give you up to 6% seller credits.
Yeah.
So you're literally buying a home and you have your first home with a duplex with a rental.
But also higher loan limits too.
Yeah.
So for property type, units versus 1 unit.
So let me ask you guys some questions about the loans on that. We were talking about house hacking. If I had a friend and we wanted to buy a house that had a DADU on it, could we, and tell me the price points here, could we use that future DADU income on that loan? And if we could, is there like a break point where that would not be allowed? Right? Like if this was an $800,000 home and there was a DADU in the back, could I get a renter in there and give you that future lease? And could you use that income on that as long as it's below a little
so
bit?
what we would do is we would qualify you with your income, but then we can also do like a market analysis on that ADU or DADU and whatever that market rent is, we can use that to help offset your future mortgage payment.
So would it be possible to have two people paying, let's say, the mortgage, and also using that second person as an income to buy that as well? Does that make sense what I'm saying? Like you have two people paying on the mortgage, but that second person's payment is also being used as money towards the purchasing power. Does that make sense? Like we're using the DADU income on top of the person's income as well, right?
Well,
They're saying you can.
it's like rental income.
Yeah, yeah,
right.
exactly.
And
Yeah,
so
yeah.
when we order an appraisal
Yeah.
as a lender, one of the options we can select for an appraisal is a comparable market rent schedule.
Yeah, yeah.
So the appraiser is going to give us the data of what is a comparable rent for this size, square footage, and property and location.
Got it.
And then we're able to use that figure as a comparable market rent. And I think we have to take probably 75% of that.
Yeah.
So we'll be able to use a portion of what the projected rent would
Yep.
be
Yep.
for that space or the
Yeah,
ADU
To
or
help you
ADU.
qualify at that price point.
Yeah. And I'm guessing that when it goes into jumbo loans,
You
that
go into the
changes.
jumbo loans.
Yeah.
that changes,
Yeah.
We're a little bit stricter with our.
Yeah. Unless if you're trying to house hack a jumbo loan, I don't think you need to house hack probably.
I mean, you could put 50% down, get your loan amount under $1 million.
If you're in this price range, then there's probably other creative options.
we got our Medina clients on house hack over here.
Yeah.
They're like, hey,
That's why they live in Medina.
Yeah, I don't think they're house hacking.
we got our own house.
They're just trying to find a house in this
Straight cash.
Yeah. You know, jokingly, we're coming to you from Madrona, which is one of our favorite parts of Seattle. It's beautiful, it's local. And local, I mean, downtown's right there. You can get to the east side in 10, 15 minutes. The charm of it is amazing. It has all generations of homes from 20s craftsmen to mid-centuries to newer homes. The builder of this home, Chris Lewis, said something, and I really agree with him. He's like, the undulations of the hills in Madrona. And when he said that, I was like, that's so why I like it. It's very hilly, and it gives you views, right? Other parts of Seattle are flat, you don't get views. Here, almost every little hill is like, a road is like on a hill like this.
Yeah.
So just the views of Madrona are amazing. What are you liking about Madrona that really draws people to this area?
I think you just touched on just the general location. Whether you're trying to get to the east side, you don't want to live that east side lifestyle. You want to stay in Seattle, but you work over there. I-90 is so close for me. Again, I-5 is very easy. Just the central location of, if you're going north right now, you can hit the Arboretum. You hit Madison Park. You got the beach right over there. You've got, again, Madrona, Leschi, Mount Baker, all these affluent neighborhoods that are beautiful, turn of the century homes. There's, again, the new construction that are coming in, and those are obviously bringing the values up quite a bit. On the other side of this little hill, you go down it, you start seeing the views of the lake, and so that's pretty amazing there. Downtown access, with everyone returned to office, or RTO now, to get into South Lake Union, get into downtown and to the business district, you are quick jaunt. I mean, it's taking the bus. There's multiple right down the street over here on Madison, on MLK over here. And so access is important. Nowadays, I mean, traffic is worse than it's ever been in my lifetime, my 43 years living in Washington. And it's worse than what it was prior to COVID. And so what that means is that there's more people here. There's more cars on the road. And so having, the proximity of downtown to, so you have a son or daughter, child that's going to the University of Washington. It's literally down the street. You have someone that works at Microsoft. They can jump on I-90, go to 405, and then and go over to 520, and you're downtown. Downtown.
Either one.
Access is everywhere in this location, and so I think that's kind of the big thing. In Madrona, the other kind of nice thing, and I think we've mentioned this in other videos, podcasts, that they have their own city center.
Yeah.
It's not massive, but there's coffee shops, there's restaurants, there's breakfast spots.
Great restaurants.
They've got some, really cool, artsy spaces out here, and so the walkability is great over here too. Yeah, you mentioned undulation, and there's ups and downs, but there's plenty of flat areas too, all around us. So if you wanted to walk down to Madison Park, you could. If you wanted to walk literally, 6 blocks up, and you have Madrona, the downtown retail space district over there. You go down the street, Chinatown International District's not too far. And so again, having access, having the ability to get different types of food, to go shopping, to, again, get freeway access. It's all here. I mean, that's a great thing about Madrona, and what people really look for in in-city locations. And this is truly an in-city location that feels like a community, a suburb, but it's so close to downtown and all the major businesses. So I think my biggest thing about Madrona is if I live here, I know I can get to anywhere, everywhere in a short term. So,
And I think from guys that are suburbians now that moved out of the city,
Suburbian.
and I definitely miss a lot of the downtown living, whether it be access to the city, to restaurants, walkability, parks. There's a uniqueness to the homes that you find here.
Yeah.
I mean, you look at this beautiful custom home, and the neighborhoods we live in are very, very cookie cutter. Just to be truthful, I mean, there's a lot of tract building homes, and that's great. There's some new construction, but when you get something like this from a product, from a home you're buying, there's so much character to it and so much diversity in terms of the homes from one another. So I think that's really appealing from a buyer standpoint, is being able to find a location that's in Seattle that has access. You're not dealing with the 90 being closed. I think it was a couple of days ago, the 90 was closed, or the access to the 5 was. So I mean, there's just so much that is appealing from access, but also just the homes themselves have a lot of characteristics that I think give you a lot of options for personality.
Yeah.
You know
One
what?
of the original neighborhoods of Seattle.
Yeah.
All the homes, looking around, they're beautiful.
So another cool thing about this home, a very unique feature, and I think you guys will see more of this going on as we progress forward, is this house has multi-generational living. Now, what does that mean? Well, you can store your parents downstairs and never have to see them again. Just kidding. Wow. So what it means is it's actually 2 homes in one. And you're probably familiar with this as a ADU or a mother-in-law unit.
Yeah.
Well, Chris Lewis, who built this home, thought of that beforehand. And so it is so, like, it's almost hidden in this home that you wouldn't know. If you're looking outside, you wouldn't know that there was a ADU in the back or downstairs. So it's really well done. And the purpose of this was, we're all getting older. We all have parents that are getting older. And some people have the finances to not have to send their parents away somewhere or put them in a home. And they'll just live with them. But it'll be a separate kind of living thing, right? Like downstairs, there's a whole separate entrance. They have their own living room. They have their own kitchen. They have their own dining. They have everything downstairs. But they can come upstairs if they want. There's a shared wall. And so I think that's going to happen a lot going forward in these upper end homes, because those people who can afford these homes, they don't really want to ship their parents off somewhere. So if they have the ability to do that, that's something that I think we'll be seeing a lot more in homes going forward. And now we're adding that into everything awesome that we just talked about, Madrona, right? You can be here with your parents or with family, or just have the downstairs as a place where people come and stay, right? You don't necessarily need to rent it out. So Seattle is showing you all of its hands. Now you can have a $600,000 home with a DADU. You can have a $2.6 million home with a living situation downstairs that you can rent out, that you can hold on to. You can have your nanny living there. You can have your parents living there. So this multiple living situation, it's going to be all through all price points in Washington here soon. If you guys have any family in Vancouver, BC, they've been building homes like this for 30, 40 years. $3-4 million homes in Vancouver have mother-in-law units downstairs.
Well, even I lived in Arizona for many years, and but a majority of the newer high-end homes, there was always some sort of mother-in-law suite.
Yeah.
So it's nice to see Seattle and the builder community really pick up on that and incorporating that into their new product. Because take it from us from a financing standpoint, trying to add it to an existing home is a huge process. From permitting to construction to getting the right contractors. So people will want these in their existing homes, but it's a major process. So they have it built up from the ground up like this, like your builder was thoughtful enough to do. It's priceless, in my opinion.
And another interesting feature about this home is it's built to have that ADU downstairs, but they've thought ahead. There's a wall that can be removed, where then it just becomes another living room. You just go downstairs and it's an open wall as opposed to a closed wall with a door. So really thinking ahead, where if you don't want that feature, we can take it out for you as well. So I'm not saying that all homes will have that. I think Chris is just thinking ahead, but it makes it functional in multiple ways, right? I don't want that wall. I just want another living room. Cool, we'll take that out for you. So I think we'll see this a lot more going forward. I know we have family and friends all over the world and different kind of living situations, but the overall theme in Seattle is more density, zoning's changing, and we'll have more videos coming up on house bills that are kind of going around the state right now, passing and being implemented. But the overall theme is we're trying to pack more people into smaller spaces. A lot of people are going to hate that. If you own a single family home in Queen Anne, you don't want a high rise coming in next to you. So there's going to be a lot of debate and discussions. We actually have one of those people who live in Queen Anne on a single family home that probably wouldn't want a 20 unit condo going in next door. So I know, Henry, that your specific South Slope neighborhood got some kind of paperwork about like talking about height restrictions and this and that. So it's going to be interesting to see how each specific community, like in Queen Anne, there's South Slope, there's the top, there's East Slope. And so they're kind of like talking about it specifically, like how does this impact us?
Yeah.
How would you feel, or what would be your thoughts if, I don't know, a 20 unit complex came in right below you?
So what you're alluding to, the city is coming out and saying that any single family lot on the South Slope or parts of the South Slope right now, the zoning's going to change where you could put up to 6 units on it.
6 units.
So
Oh, wow.
it's a scenario where, that area, that location, there are some massive homes out there. There are, beautiful estates in that area. And so it's going to be hard for a developer to justify tearing down a $3 million house, a $4 million home to put, townhomes in there or a high-end apartment complex or condos. So you're not going to see it quickly. There are some older homes that are maybe dilapidated where, hey, you could buy it for $1.5 million and then put 6 units on there and they sell for $1.5 million each. There's a lot of margin in there. And so there'll be certain areas, but I don't think it's going to be drastic, at least in the beginning, because the price points are too high. And that doesn't just go for Queen Anne. That's going to go for Madrona. It's going to go for Capitol Hill and Magnolia and all these other areas where the zoning is going to allow for more density. But some of these neighbors it's not affordable for a builder to build there right now based on prices. And so is it good for us? Of course it is, right? We're in an area where we're landlocked by the mountain, by ocean, the lake, hills and everything else. And so, Seattle's growing bigger and bigger. I mean, with the return to work again, with the startups that are coming out here, with, Silicon Valley, moving up here, we've already seen it for the last decade plus. I think more and more people love the climate out here, the 4 seasons, to be able to go on the water and go on a boat, to go skiing or snowboarding in the wintertime, to go on a hike, in the spring and summer. So you have a lot more people. I mean, our client base right now, they're still, for the most part, local, but more and more referrals that we're receiving are from people coming from California and Texas. And again, they have the money, they have the want, they have great jobs and RSUs, and maybe they're bringing their company up. I've got a friend that I met through my son's daycare, and he brought his startup here. He had an office in Chicago and Austin and California, and he wanted to come up here, and so everything's been isolated to Washington, even though a lot of his employees still work from home. You have so many things, so many places, so many ideas in Seattle and Washington proper that people love. It could be the politics as well. And so they're coming out here. And so the density, I think, is a good thing. Again, there's definitely going to be people that are going to hate having a nice home and then finding out that someone's building a small apartment complex or townhomes. They're losing their view because the height restrictions are higher than what they were, 50 years ago, 100 years ago. And so that's going to be problematic for some people. But at the end of the day, we need more homes. Whether it's apartments for people to rent, whether it's for people to buy a condo, a townhouse, or single family home, we need more of it. And so, there'll be growing pains. Of course there'll be, and there's going to be, an uproar from neighbors and people and saying, hey, you're destroying our neighborhood. The reality is there's no more space out here. People are building on hillsides and spending, tons of money on foundations and putting pins in the ground. So it's safe to build on it. And because there's no other land to build on it. And so those are expensive homes because it costs so much for the infrastructure. And then now you have a view because you're on the hillside. So at the end of the day, I think it makes a lot of sense where we have to do it because, again, the migration of people coming to Washington, coming to Seattle, to Bellevue, the east side and whatnot, people need homes. And so it's good. It will be interesting because, again, we always play on the idea of traffic. Being in a central location gives you access, less time on the road, fusses, light rail, whatever it may be. But the reality is our roads are not meant to go from 5 in downtown Seattle to 2 and then have a bus lane and a bike lane. There's so much traffic created by the Department of Transportation, and it makes no sense because we don't have enough buses running. We don't have light rail connecting to every single neighborhood and borough and location. And so, people are going to start migrating back to the city. I think we saw during COVID, everyone wanted more space, go further out. I want a yard. I want a big home with an office and whatnot. I am already seeing professionally, I am already hearing personally from my friends saying, I can't make this hour and a half commute. This is crazy.
Yeah.
I need to come back closer to the city. I need to get, closer to Microsoft in Redmond. I need to get to, Expedia, in Inner Bay, Magnolia, Queen Anne area. I need to go, get to Apple on Dexter. Whatever it is, people are going to come back to the city. And so I think that density is going to help out eventually. Again, the infrastructure isn't here in our city, unfortunately, for more roads, or they're making less, which I think is asinine in my personal and professional opinion. But the reality is that's just going to bring people back. And again, we need the homes to shelter these people.
When we keep talking about the return to work and where our big tech sector and some of these bigger companies are driving that decision back to the cities, and it trickles down to a lot of sectors of our economy here in Seattle. You think about the restaurant business. You think about entertainment and all the different sectors that are going to benefit from people being back in office.
Yeah.
At the same time, like we're talking about, it's creating challenges for traffic, for access to getting home to your family within a reasonable time. So all that's going to then eventually create more demand in the real estate sector. So it's so important and critical now to get ahead of it, to work with good real estate professionals like Henry Nakash, because you've got to get ahead of it now, or you're going to find out how much harder it's going to be in a position to buy real estate, as we're talking about, because it's going to continue to be in high demand in the city.
You make a great point, and this is off subject a little bit, but with the city of Seattle now raising minimum wage again, there's lots of restaurants saying they're closing down. I have a friend that owns a couple coffee shops, and he's like, between tips and the 20 plus an hour they get, I've got my baristas making 80,000 plus a year. What does that entail? That means our coffees that were 10 years ago $2-3 that are now $7-8, they're going to have to go up to $10-11, which is crazy for a cup of coffee. But what that means is, again, you need to have a safeguard for your money, right? Inflation is still out of control. It doesn't matter what Fed Powell and now Trump or Biden and everyone, they're trying to fix it. There's no way to fix it, right? Everyone wants to make more money. Everyone's like, okay, we'll just increase prices on the consumer. Now you have these tariffs and all these different talks, but the reality is getting a home now at today's prices, because of inflation, there's going to be a natural progression of prices getting higher. If those tariffs for new construction, building, and unfortunately, again,
think about lumber costs. If Canada is one of their biggest exports, lumber.
No.
So if we continue down this economic path and policy of trying to force whatever policies and positions on other countries, tariffs are going to be part of this, which then trickle down to the consumer in terms of prices and costs.
Your guys' gas and eggs didn't go down last Wednesday?
No.
Because mine went down last Wednesday. My gas and eggs is so cheap right now. I swear, I woke up Wednesday morning and it was like 99 cents eggs, $2 gas.
Problem fixed.
And I was like, we're great again.
Oh, and the Fed, to your point, the Feds are not going to cut rates this meeting. I think it's today.
I think they said they're not closed yet.
So, and what that means in our side of the business from a financing standpoint is our interest rates have continued to be in sort of a lull. It's so volatile. There's not this dramatic drop in our interest rate, which is tied to the 10-year Treasury bond. We've had a little bit of an improvement in the last few weeks. So if anybody's on the fence and looking, make sure you reach out. We'll give you some updated information and data on where interest rates are. But for those that are waiting for some magical event to happen, we're not seeing it, and we're not getting anything from the Fed that's going to help our position. If anything, the more economic uncertainty and volatility there is, the more our market is going to remain in this uncertainty. So I think coupled with the real estate side, with demand, with density issues, the mortgage side, where we're not going to go down to 3% rates ever again, at least in our lifetime. The decision to buy and acquire real estate is always that when it's right for you. And if it's right for you and you're waiting for something else to happen out of your control, you're just missing out in terms of building wealth and creating some generational sustainability.
Yeah. And there's another thing that goes along with that. If somebody right now is ready to buy, they're pre-approved, but they're waiting for this magical rate to come back, which we don't see that happening anytime soon. But let's say it does. Guess what?
Competition.
Everybody's going to get right back into the market.
Yeah.
And then that house that you saw for 800,000 is now going to be $1 million. That house you saw for $1.5 million is now going to be closer to 2.
And it's going to be, we're already preparing for it. We're already seeing it this year, early into this year, a month into it, where folks are, I think a lot of people are accepting the new norm, right?
Yeah.
The new reality of the market, of the interest rates, of, when we started in this business over 20 years ago, interest rates were 6.5%, 30-year fixed. That was just the normal interest rate we grew up in this business. Now, granted, historically, they were double digits. And then we had this real long period where it was in the 4s and 5s, and that was really an amazing spot to be able to finance a home for 30 years.
Yeah.
But that just really isn't the norm, and we're getting back
In
to
reality, we're closer to the average.
Correct.
Yeah.
30-year fixed interest rate.
Yeah.
Those rates that we saw during 2020, 2021, that was an artificial stimulus just to help everybody.
Yeah, let's be clear on that. That didn't happen on its own. It wasn't the open market doing it. It was Fed Powell spending trillions of dollars to get your rate down.
I mean, we were going through like one of the biggest economic like slowdowns.
it was a global economic.
COVID happened. Like everybody was locked in their house.
So I think I just want to touch on something. I think we've all talked to clients and friends and family who are just waiting, right? They're waiting for something magical to happen. And then at the beginning of the year, because you get numbers from the previous year, it's always home prices went up 4% on average. We predict them to go up 3 to 6% the next year.
Yeah.
This has been the same numbers for the last 3 or 4 years. So even if that 4% was zero, your home price hasn't gone down, it just hasn't gone up. So we're not even at the leveling out, we're not even negative, right? So this whole idea of waiting for home prices to come down, I just don't think it's a thing that's going to happen in Seattle. I just don't think.
Well, and it's not even so much our opinion of whether it's going to happen or not. You just need to look at the data. And if we had a whiteboard behind us, we can take a look at, here's what your home was worth last year. You waited for 1 year. Even if it went up 1 or 2%, that cost of that home was, an appreciation that you didn't recognize because you waited.
Yeah.
Or then you talk about
benefits.
correct. You got tax benefits. You're building into, but we're also talking about competition.
Yeah.
There's the density of Seattle is limited. You don't have more homes unless you do tear down homes and new construction like we're seeing, which is great. There's not a lot of land to build a bunch of tract homes that are going to create more supply. So it's a supply and demand matter. And so when we look at supply and demand just from economics, the math is the math.
Yeah.
And there could be a lot of economic impacts that might slow the economy or have some things that are going to impact the stock market, for example.
Yeah.
Unless, in our opinion at least, there's some major economic collapse. Housing is based on regionality.
Yeah.
It's based on individual need. And it's going to be a continued strain because of supply and demand.
Yeah.
That's it.
Yeah.
And that's the way to look at it.
It's like what Jimmy just said, this year you're starting to get more applications. People are getting off of the fence and saying, hey, these rates are now the norm. I need to either move forward and just deal with it. In a couple of years, 5 years down the road, if rates go down, maybe I refinance then. It could be 6 months. Who knows when that happens. But, we have seen boots on the ground on the real estate side of it where Q3 and Q4, our clients are, there's a good and a bad. Our buyers, we got great deals. We got stuff under asking price, under what market value was, because everyone's like, what's going on? We got to wait for the election. We got to see what's happening. The clients that kept on moving forward, we were just like, oh, we knocked 50K off of this, 100K.
Well, these guys are also really good at what they do. So don't be so modest. When you're working with the right real estate professionals, I mean, they're going to give you not only the data and the information that you need to help make a decision, but and Dwayne and I have worked personally with Henry, and your style is one that I think is you're giving information and you're not trying to tell people what to do.
Yeah.
But you're so honest with it and direct. I think that some people need that. Some people need a little bit of encouragement from a professional to get them to make a decision where they don't feel like they have
There's
everything.
no reason to sugarcoat anything. You
Just tell you how it
I think the only thing I've heard Henry, and I now do this too, tell people to do is to not sell their home. And I'm like,
if you don't need the money, don't sell it.
don't buy this home. Don't sell your home.
no, because here's the thing, like we want,
Yeah.
so we can either help you buy or sell a home, or we can help you make money in real estate. Like there's a separate, right?
Yeah.
Anybody can help you buy or sell a home. But if you want to make money off of this vehicle that's been afforded to you, then sometimes it doesn't make sense to sell the home.
Yeah.
Just straight up. It doesn't. Rent it out, split it, do this, refi, whatever. And we'll be the first ones to tell you, because I want a happy customer, I want a happy friend, I want a happy family member that says, hey, they were right. They didn't make me sell the house just so they could make money. And then they feel good about it. And it actually did make them money, right? Like that's kind of the goal here, is to help everybody be successful. Maybe sometimes that's you selling your home. But a lot of the times, if we can make it work, it's not selling the home. It's making that a rental income or some kind of asset.
Well, this is a true personal story. So Henry helped me buy my first prop real estate here in Seattle. It was a condo in Lower Queen Anne. And, you know, we had looked around for a while, and finally we landed on a place. It was 2-bedroom, and it was I was renting for a long time, much longer, and my wife reminds me, we should have bought that house in Madrona.
That's her.
The small townhouse.
Good on her.
Oh, I get reminded all the time about. She's like, you
Always
should.
right. All of our wives are always right.
Always right. So we bought a condo, and I put like 5% down. I didn't have a ton of money, but I was like, it's my first place. Just get in, right? Well, fast forward 3 years later, we decided to start a family, and we're going to look for a single family. Call up this guy again, and I'm like, well, what are you going to do with your condo? I'm like, I don't know. What do you think? Should I try to sell it? He's like, no, just see if you can rent it.
Yeah.
So, we were able to retain the condo, rent it out to cover our mortgage. And it wasn't like I put 20% down to buy it. It was just, it got me in the door.
Yeah.
And then as we went and looked for a single family, from a financing standpoint, as long as you can document that there's going to be some rent that you can receive from that, we were able to help offset that with projected rent.
Yeah.
And so, the moral of the story is, you get into real estate. Now I've got that place paid down a ton, and, I've got a great financing position I'm in now because I was able to refinance.
Yeah.
You're never stuck with your loan forever.
Yeah.
You can always refinance when the market changes or when your financial circumstances change. Let's say your credit gets better, or let's say you have, an interest rate market drop. So, there's nothing that's permanent when it comes to the financing side.
Yeah.
But what is permanent is you acquired a piece of real estate.
Yeah.
And you've been able to now start to build that nest egg for you and your family.
Yeah, I think with my condo, the one that's literally across the street from your condo.
Yeah, we were neighbors too.
Dwayne refinanced it twice for me. I took some money out, did some other things, other remodels and whatnot. And so, that's 100% accurate.
And there's great deals in condos right now, guys. Just to talk about, the real estate market.
I got 2 more great deals coming up.
Yeah, if you're not in the market for a beautiful new construction in Madrona, call these guys up and get you in a condo. You can find one. I'll sell you mine, for example. It's whatever you need. But
We advise you not to.
hey, it's beautifully remodeled. I love it. It's right in Lower Queen Anne. So it's ultimately getting into real estate, acquiring it, and building something for yourself in your future. And that's the best way to start.
That's the smartest decision a buyer in this market right now can make. If they're qualified, ready to do it, do it now. Don't wait, because if you wait, there's going to be competition. Price is going to go up.
Rents are going to go up.
Yeah, it's just going to be more expensive down the road.
I did the math one time after I bought my condo. I was like, how much did I spend on rent for 3 years? And
Don't do that. It's bad.
It's like, oh my gosh.
Yeah.
And look, it was fun. I moved to the city. I didn't really know where I wanted to live and which part of the city was right for me. And so, there's that. And then of course they had these beautiful downtown apartment buildings with feel like a spa or a bar. Restaurants. So, it's definitely an appealing kind of setup, but then you start thinking about financially where you're putting your money into somebody else's pocket.
Yeah.
Yeah, it's kind of go back to my story of, Q3 and Q4, there are deals out there and some of our listings languished. Again, to just be frank, but this year we listed a place and it went into a bidding war, or we actually got more than asking price on day one.
Yeah.
We just had another one in Green Lake that went above asking price. The clients for the Green Lake home, they thought it was maybe worth around $1 million. We left them $1.1 million, right? We told them the way they were ready to list last year. He said, the market's not good for you right now. wait until January, let the floodgates open up of all the past buyers that haven't bought anything and all the new ones coming into 2025. And lo and behold, we have 35 people through a couple open houses. We had 27 broker tours. And again, we just had lots of activity, people calling, asking questions, asking for the inspection report. The one in Redmond we're going to list and the one in Bellevue. And we told them, don't put it in Q4. It's a terrible idea.
Yeah.
Right. There's nothing out there and the prices are kind of, pushed down because there's so much inventory that's sitting around. Come January, I guess January's almost over, but next month we'll be listing a couple of those. We got a remodel, another one in Green Lake that we're working on. And so we're trying to educate the client, and they want to sell. We said, hey, do keep it as a rental. They're like, we're just tired of owning this one. It's too far from where we live right now. The Redmond one, they live in Green Lake right now.
Yeah.
And then the one in Bellevue, they're trying to get a bigger home.
Yeah.
Clients in the remodel that we're doing in Green Lake, they are just older in age, and so they're going to move in with their kids. And so we're doing a pretty massive remodel for them. But we went around and spoke about the timelines, what needs to get done, what's your best bang for your buck, return on investment. And again, it goes back to what Jimmy's saying where, and Dwayne and all of us, if you wait because you think rates are going to come down, you may cost yourself exponentially more because the price has gone up.
Yeah.
Right now, it hasn't even gotten crazy yet. And I think the reality is return to office, all the jobs that are out here, the tech sector. I mean, some of the clients that we're getting, referred or friends of friends and whatnot, they're in their 20s and they're looking at $1.5 million homes. Just like at my 20s, I was like, what am I doing?
I was looking at $1 million homes too, but just looking at $1 million homes.
Wasting my wasting my time.
Well, and you guys, we're forgetting about seasonality too.
Yeah.
The traditional, typical seasonality in the industry.
Yeah.
Last year was a rough year. I think we all can agree.
Yeah.
And so, as the normalization of the market, the industry, it's not an election year anymore. So, hey, this is what we've got.
Yeah.
And so, you're watching this video right now in end of January, and you've got maybe, what would you guys say, maybe a couple months of where before this whole spring buying typical, granted there might be more inventory, but that's going to be coupled with more buyers and more demand. So it's just going to create a frenzy in our prediction, at least.
I got a quick story.
Hear what you guys think about that.
Our Bellevue condo that we're about to list, I was a referral from a friend, and we spoke in September, and he wanted to list right away. And I talked to him on the phone yesterday, and he's like, gosh, it's so hard to time the market, and I feel like that's a fool's errand trying to time. I was like, we can control what we can control. Mm-hmm. And we can time the market in the sense that we don't want to list in October. We're waiting till January and February to list. So I was like, we're controlling what we can control, and that is when you list, right? If we had listed in October, it would have been completely different, pricing wise, whatever. And so he felt so much better that he actually did listen to us because it is the new year. Showings are up, viewings are up, right? Mm-hmm. And I think that when I heard him be like, oh, I feel better now, I'm like, that's just from you as an experience.
That's why you guys are in the position you're in and why you're so successful.
Right? I remember he's like, I want to list the first week of October. I'm like, well, why not pick Christmas Day? Right? Why not? Right? Let's just do that day. And he's like, are you sure? And I was like, yes. And I gave him the data.
Your first showing on Super Bowl Sunday.
Yeah, exactly, right?
It's some of the worst times to think about.
And I actually made a video about this back for the presidential election, and this is actually what got this client to wait. Every presidential election since the 60s, besides 2008, the following year, interest rates have gone down, and mortgage applications have gone up, and number of sales have gone up. Besides 2008. Some of y'all weren't adults in 2008, so you won't get it. Something happened.
Yeah, you look it up on Google it.
But every single presidential election, the year after, real estate is busy.
Exactly.
And it's a lot of people, whether you're left, right, middle, whatever, you just want that to be done with before you place $500,000 somewhere, right? Mm-hmm. Whether you agree with policies or not, you at least have some sort of certainty, maybe in uncertainty right now. Anyways, but movement picks up after that. So we're looking at this year hey, it's going to be a lot better than last year. Multiple things. People get used to the interest rates. It's going to take a year or two to get used to that interest rate. Now they're used to sixes. Elections done. All of those things, we think it's going to be not like 2020 or 2021. We don't ever want that again. 50 offers on a home.
It was a pretty good year for real estate.
Yeah, for you guys.
Yeah, but it also created the mess we're in right now.
It is. And
So-
I remember telling my wife during, I think it was early 2021 when things were still going on. I'm like, how is this is still going? Like, this is still.
It's gonna be hard to sell this 2.1% home.
No, I just told her, I go, make sure you remind me years later when this whole thing happens that this was just like imaginary, or this wasn't real. This was sort of a isolated, and so look, guys, it was an interesting time. We bought, my wife and I were 8 months pregnant when we finally bought our house, and it was like, all right, that's it. We got to either get in there, just stay put. So it's all time based on when it's right for you.
Yeah.
It was an amazing time to buy, but both Henry and I, our wife, are like ready to give birth. Like, you got another kid. Get that nest. We got to start making that nest. Come on.
You want that second kid?
But it has, but listen, it has been an adjustment, especially from a financing side. Me and Dwayne are dealing with, trying to get people to understand, say, hey, look, it was nice. Sorry you missed it. Or if you didn't miss it, you took advantage of it. You buy a house now and you're in this 3% rate, and you don't want to let go of it. You got to let go when it's right to let go.
Yeah.
And you just can't be beholden to an interest rate when it comes to financial decisions that impact your future 5, 10, 20 years from now.
Yeah. And I think we're further enough now where we can start seeing people who naturally have to move, right?
Mm-hmm.
Last 4 years, getting somebody to move just discretionarily, like just move, that was impossible, right? I got a nicer house, but you're going from 3% to 7.
Yeah, it's
Right?
major.
That was hard to do. But after 4 years of those people who got those loans in 2020 and 2021, now it's, hey, I have a kid, I have to move.
Exactly.
Hey, I got fired, I have to move.
Life found a way.
Somebody died, I have to move. So those are going to start creeping up again. It's that fourth person who moves just because they have money. That one's been kind of on the side a little bit.
Yeah. What's the motivation to?
Right? But now it's like, hey, it's been 5 years. Great. I have to move. I have 3 kids instead of 2. So you'll start seeing, hopefully next year, this year, that accidental landlord that was created in 2020 and 2021, maybe they'll have reasons to start selling now that are natural and not like interest rate related, right? Like, hey, I need a bigger house or something. And I think we'll start seeing that as well. But yeah, that 2% interest rate, great for buyers. If you could get the house.
Yeah.
Yeah.
But we also spend a lot of more money than we
Here's $1 million home.
expecting to.
Here's $600,000 down.
There was 20 people bidding on the same house,
Yeah.
and it's like, so everything's relative, right,
Yeah.
guys? I mean, that's the name of the game, is trying to find out what's right for you, but it's all relative.
Yeah.
Yeah, that rate game just reminded me of the house that we wrote an offer on before getting our home in Queen Anne.
Yeah.
I want to say it was like 30 plus offers there, and I had to pull the plug because I went 44% above asking. Thank God I didn't get that home. That's 44%. It doesn't matter what the rate is. Like going 44%, like I would have to die in that home, and my kids would have to die in that home and live there for their whole lives to make it worth it.
I'll never forget the conversation we had though.
34%.
Yeah. I mean, and I think we went through 3 offers prior to us finding and securing the house we're in now. But I remember after losing out on a home in like Newcastle, and a beautiful big back. Remember the big backyards in Mainview home? And
Yeah.
And it was like, we could have, should have, would have bid more, but it was one of our first offers. So we kind of were a little bit, it was new into the process. And Henry, being a good agent, didn't want to push us one way or the other. He just said, this is what we need to do if you want this to work. So I said, you know what, let's just call it. So then fast forward to wife, now this is like months later, 8 months pregnant.
Even more offers.
Wakes up, see the house, and she's like, literally rolls out of bed, ready to pop any day now. And she's like, buy this house. I don't care what it takes.
Oh yeah.
So I call Henry.
Oh yeah.
I'm like, all right, we found another house. It's in the same neighborhood as the one we put an offer in before that we, again, pulled the plug on because it was just getting ridiculous. But this house was not as finished. It was a really poorly listed
It's
house.
only 35% above, right?
Well, I'll get there. I was ready to go whatever, because at this point I'm like, all right, I did the math, right, guys? We're talking about doing data. I'm looking at math. And the fact that I waited instead of that first offer that we could have maybe went a little bit higher to get, it was 6 months later.
Yeah.
Interest rates went up.
Yeah.
Value went up. So, I mean, you got to find the sweet spot that's right for you. But, the data suggested that, if I went up an extra $50,000 to buy this house, mathematically, my mortgage payment went up $50.
Yeah.
But if I miss this house and I don't buy and I'm in my condo with my pregnant wife, pulling my hair out with a newborn in a small little condo. So anyway, so we get to the house, and Henry, being the good agent, settled me down and said, okay, we're going to go in with an offer that's competitive, but we're not going to overdo it. I'm like, well, listen, don't screw this up because my wife is going to strangle me.
Yeah, because wife.
She's at home saying, I already know the house. I don't even need to look at it. Just go buy it because I need to get our room ready.
You better dust off
That's coming.
that 22 AD.
But I mean, credit to Henry. He settled us down. He put in a competitive offer, and we were able to. Again, I was willing. I remember the call. He said, "Hey, I got some bad news." I'm like, "Oh boy, how much more do I got to pay for this house?" And he says, "You got it. Offers accepted." I go, "What?" I go, "How the hell did that happen?" And I'm thinking, there's no way they're going to accept our offer because I was prepared to go higher.
Yeah.
I expected it to go higher, and Henry, being the guiding light and principled agent that he is, didn't want me to just overpay for it just because I could or because I wanted to, because I was pressured into it. It was, the guidance was saying, let's do this the right way. Let me work this the way I know I need to work this. And it was amazing. We worked it out to where, I paid what, was more than we wanted, of course, in the market, but it was the market at the time. So part of the story for the audience is, if you're out there looking to buy and you're worried about the market or what's going to happen, you got to find the right people to work with, number one. Timing, you can't control timing like Akash says.
Yeah.
It's the market is going to do what the market's going to do.
Yes. Yeah.
But you've got to be prepared to make a decision that is based off of, your data you've got, when it's right for you. And let the professionals give you the direct information and guidance to make sure you're doing the right thing.
You know who doesn't care about interest rates? Pregnant women.
Yeah.
No, get me out of this condo right now.
And then and then his wife, did she give birth to Theo right when we were under contract, or was she getting ready to? We were literally in the process of buying the home, and I think both our wives were really close to each other. And poor Henry was trying to negotiate this. He had 15 other clients to work with, and it made me feel like I was the only one. I was like, I'm really sorry. But I mean, that's what you had to do at that time, because it was so busy. You had to be able to jump in, and it was a really, really interesting process. But you've got to find the right people to work with.
That home is beautiful, and you've got a couple different iterations of the interior.
Well, and the thing is, guys, is unlike when you buy an amazing, beautiful new construction like this. When you buy a home, it doesn't mean you have to have it stay the same forever. You can always make changes and modifications. You can paint it. You can update the kitchen. You got a lot of resources here. These two guys, they know every single contractor in the area, every single tile place or cabinet place. I mean, you just work with them and you just fill in your wish list after you acquire the property. You don't need to have it be the same. And there's a lot of ways from financing we can help you out with making sure you're in a great financing position in the beginning, so that you can prepare and plan for how you want this house to be, as close as your dream house as possible.
Well, I think we're going to wrap it up, guys. Dwayne Lockett, Jim DeMarco with CMG Home Loans.
Hey guys, thanks.
This is obviously the Henry Shim. The whole group is named after him. You guys see him all the time. And my name is Akash Sandhu. Thank you for joining us today on Real Estate Seattle Today.
Thanks all.